Well, in business, Indonesian regulators promising reforms to improve transparency in financial markets after what would have been the benchmark Jakarta Composite's worst two-day rout in decades. Stocks under pressure following index provider MSCI's warning about limits to the number of shares available for trade in Indonesia's biggest companies, also known as the free float. Equities down as much as 10% and triggering a trading halt before regulators announce measures to address those concerns. The Financial Services Authority says it will be doubling the minimum free float requirements for listed firms to 15% starting next month. It added that communication with MSCI has been positive so far and is hoping that issues can be resolved by March. More analysis, Radhika Rao is a senior economist from DBS Bank. She joins us live from Singapore. Ms. Radhika, issues were resolved by March. Issues on transparency, company ownership, investability, can they be resolved by March?
Hi, Vesu. Certainly, the MSCI has raised some concerns. I think one of them is a free float issue, like inadequate amount of free float, and Indonesia's thresholds are a bit lower than where the regional average is. Apart from that, they've also asked for some more details into the shareholding patterns behind countries and behind the counters, and also to make sure that there is no stock manipulation per se. I do think that since the news broke about their review, the regulators have been very proactive. They have actually come out and already made some announcements. They have already spoken about doubling the free float threshold. Apart from that, the State Investment Agency has also spoken about buying up more, increasing the participation in the capital markets. And I think there's also some news about, making public some amount of shareholding information as well as some of the smaller companies. So yes, I think these are incremental steps. There is time till May, after which the MSCI plans to take, they've suggested one or two other actions that they could take. But insofar as the authorities actually show their intent to correct some of these, I think we see a lower probability of a change in the weighting of the index.
There have been concerns about free float, the limits to number of shares being traded, and that has been since late last year. The timing of MSCI's announcement or this ruling that could lead to a change, that's interesting, the timing.
Certainly, in fact, this was something that the local investing community was keeping an eye on, even late last year. Before this review even came out, I do remember the financial securities regulator talking about plans to, increase the free float threshold from about 7.5% at this point to 10, then 15 and 25 eventually. While there was no mention of a timeline, I think there was quite clearly an intention to already work in that direction. At the same time, some of this information was also, available for public consumption. So I think this, again, has been a staggered move, to meet the requirements of the index provider. But certainly now that the review is clear and there is some window available, I think what is pending is a very clear timeline-based agenda on how this will be solved. But we should be clear that some of this can be fixed immediately, while some will take time, especially on the governance side and, providing more information on a complex shareholding pattern, especially for some companies. So I think a near-term as well as a medium-term, kind of a plan of action would certainly help this index provider and also prevent other index providers from following suit.
We should make it very clear, these are market concerns, but there have also been other broader concerns about the fiscal deficit in Indonesia and possibly the central bank's lack of independence in moves it might make on monetary policy. And that's not helping.
Yes, certainly it does, come at an inopportune time from that point of view. But I think what we have seen is since this MSCI news came in, the reaction seems to be quite localized, to mean that the equity markets have really underperformed. I mean, they've corrected sharply on Wednesday and Thursday. but you don't really see a huge ripple effect, either in the currency, a very small depreciation pressure today. Apart from that, even the bond markets have been largely stable. So I think at this point, markets do see this as a localized to equity markets reaction. And I think what has also happened in the background is that more retail investors and domestic institutional investors who are really, front running the selling. Foreign investors also in negative, but a very small amount. So again, I think much of this is in wait and see till May comes around. And I think between now and then, we do expect a lot more concrete action. And very quickly on the last bit that you mentioned about, certainly there are some other nagging issues on the macro side, which is that fiscal deficit is very close to their red line or mandated threshold. And there's been some developments which have actually questioned the central bank's independence. But the new official who has joined has mentioned that central bank's credibility will be maintained and decisions will be taken on macro realities. So I think at this point, investors are essentially going to give the benefit of the doubt to the Indonesian financial assets and take it as it comes, especially on the fiscal side. I think the numbers will be watched very closely as 2026 unfolds.
You mentioned the 2.92% fiscal deficit number, and that's getting very close to the threshold of 3%. I think the concern is that if you are racking up more debt because you are spending, that's one issue. But the concern is that revenue is not where it should be on Indonesia. Final question.
Certainly, 2025, the preliminary numbers have put the deficit at very close to the threshold. In fact, we do think 2026 will also present similar numbers if this threshold itself is not raised. There is that likelihood as well that we are watching quite closely. At this point, I think the new government that has come in has a very different approach from the previous one. I think they prefer to do a bottom-up kind of spending push, focus more on welfare-related spending. There's also an investment agency that has been set up, which is likely to, do more need-based investments. So I think the modus operandi on the fiscal side has changed a bit. Now, coming to where the revenues are going to come from, certainly a very important question. In fact, tax revenues to GDP ratio for Indonesia is among the lower end of its rating peers. So I think that's where much of the attention will go. Right now, I think besides some commodity-related tax announcements, we haven't seen much clarity on where the additional revenues would come from. I do think there would be some direct, indirect tax changes that might be required to structurally raise taxes from, collections from current levels. Besides this perennial need to widen the tax base. I think we would look for more such commentary to kind of ease concerns over the fiscal mix.
Oh, thanks. Ms. Radhika Rao, Senior Economist from DBS Bank.